Okay, the signals are starting to pop off like no other, and the upside may be of higher probability here. A multi-bullish formation is currently present with a 3-day historical volatility versus momentum backtest signal firing off. Let's pop open the charts for a serious edge over the coming sessions. Welcome back to the channel on this Sunday. This is ARCa. Let's dive into NVOS. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Let's go ahead and dive in to ticker symbol NVOS. And what you are observing here is the 6-hour chart where we're going to go over a ridiculous bullish quad formation breakout potential right now, team. Okay, so pay attention to this because this is actually something that's kind of intricate, and it's very interesting to study here because there are several different types of bulls trading this market. Okay, team, so first of all, I know that you've already seen this current formation right here, right? So this is currently right here, right here. These are the two shoulders to mark off the leading downside to a head, and the following two shoulders for an inverse head and shoulders, or a double shoulder inverse head and shoulders, right? So the double shoulders or triple shoulder is fine. It doesn't give it any more validity or doesn't give it any more strength. It just is what it is. Okay. So now that we have formation number 1 out of the way, right now, let's go ahead and take a look at the next formation right over here, right? And you can see that this here in a smaller time frame is a falling wedge, right? So we're going to go ahead and leave this one here as a falling wedge. And this has its own properties here, and it definitely has its own upside targets as well. Bullish formation number 2. Okay, now, bullish formation number 3 would actually be our descending channel, the very one that we've actually been talking about for quite some time, right? So this now is a descending channel, and this is where price action is kind of sitting within, right? It's bouncing off of the very top, bouncing off of those bottoms, right? And creating this descending channel, right? Another bullish formation. So that's going to be bullish formation number 3. And finally, the last formation to observe here is actually going to be the descending broadening wedge. And this is yet again another formation here in a very bullish aspect. Okay, so this is another breakout type of formation, right? So yes, we now have a bullish quad formation breakout in our hands here. Okay, so everything is looking pretty strong. Everything is looking like it can make a continuation to the upside here. And definitely know that there are several targets here to take into consideration, right? So first of all, let's take into account a couple here. Since we don't know when the end of this falling wedge is going to be, all we know is that it usually tends to break out when we're at about 65 to 75% to the apex of the triangle, and it's getting really close there. These are 6-hour candles, so this can kind of fulfill here, like by the end of Monday, even into Tuesday, right? So Tuesday would be here. Tuesday, looks like Tuesday Tuesday into midday, it seems to be right at about that 65 to 70% to the apex, which could very well break out from that point. And yeah, so let's go ahead and take a look at the center of the triangle as a potential area for target number 1, right? So let's just go ahead and do that just like this. Let me make this a solid line and thicken it just so that we know where this can go, right? So if we were to apply it from a breakout down here where we're saying around maybe I would say around Tuesday, right? Tuesday would be the first candle here. Yeah, so Tuesday, the breakout from the center of the triangle is taking us to a very curious position. First of all, we know that this is the resistance that we've been looking at based on prior price action, right? So we already have this marked off here, and it's taking us right to the top side of that. Other than that, it is also taking to us to the very top side of the descending broadening wedge. Right here. It's so close to it that the difference between 129 and about 126, right? So 3 cents in between that. Now, the other target to observe here from the falling wedge would actually be this right over here, right? So take a trend line from the very back of the triangle to the bottom side of the formation and apply it to that breakout area as well. And you can see here that this would be kind of signaling here a $1.39 breakout target, which is exactly confluent with this tweezer top right up here. That's 139 precisely. So that 139 would then have us pull back and actually bring us back down to validate the breakout from the descending broadening wedge, right? So we would break out, come back down and start validating that support, right? And then take off. And why would we be taking off from there? Well, if you haven't paid close attention enough, this area here between the Fibonacci ratio, the knot 618, right, to the knot 382, so 132 to 120, that area there marks off the golden pocket. And look at where price action tends to come back and test. It's going to come back to test right in the pocket, right? Knot 0.5 at 126, and I'm talking about 127 bottom here, right? So this area here, very bullish for price action to bounce from. That can be used as a spring to continue on to the upside. So this falling wedge alone is already suggesting that we can be facing a pretty massive upside. If we then start testing the breakout here, because remember, the first thing here, the first target that we reach at 127 would actually come back down to validate what? It would come back down to validate the breakout from the channel. Okay, so this would suggest a breakout from the channel. Then we come back and test this channel here. This is the one that I'm talking about, right? Let me just highlight it. This one right here. Okay, so we break out from the price, right? We break out from that channel, reach the top side of the middle of the triangle here. Then we come back down, start validating that support, break out from here, right? Continue on to the target of about 140, which is the back of the triangle, the highest target price objective. And that would introduce the breakout from this formation, right? I hope you're following me here, right? That will break out from this formation here, of which now we would have to come back down and validate that support, right? And in doing that support validation, we would then be jumping in to the golden pocket, of which would actually send the price action into the next targets. Now, what are the next targets exactly, right? So let's go ahead and measure a couple of them here. If you take a trend line from the top side of the channel, the blue one here, right, all the way to the bottom side, you would actually get the price objective. So if we were to put it right over here, let's just say that we would actually break out from this point. Let's just say that we were to break out where we're talking about within the triangle, right? So that would take us to a target of approximately $1.61. And now that gives us a range, right? So I would do it just like this. So this range would be 161 to 172 with a focus of the 1.272 at 169. Now, the target that this formation here, this would be from this point here. This is right here. And I'm going to go ahead and point it. The descending broadening wedge, per the trading book rules, the take profit for this formation, the yellow one, right, is located at $1.72. Okay. So the reason why I have this bottom range here is to consider the target from the channel right up here at 161. The reason why I have this line here is to focus on the 1.272 geometric level, which has to do or is confluent to both of these targets from both of the formations. So I want to show you here just how powerful this can be. Right now, another thing that we can take into account here is my dog. Okay, another thing that we can take into account here is actually the breakout from the inverse head and shoulders, right? So here comes the little guy. If just in case he comes in here, team, don't mind him too much. He's just gonna say hello to us and kind of hang out for a little bit. So this right here would be the target from the inverse head and shoulders, and let's just see where that takes us, right? So we apply it to the center of the shoulders here. Actually, the top side of the right hand shoulder, which would be right about here, and that is taking us to a target. Let's see, what would that target be? There we go. We can put it right up here. Oh my goodness. Here we go. I'm wondering if actually, hold on. I'm sorry. I didn't notice my other shoulders here. Oh, there we go. Sorry about that. Now this makes sense. I'm like, what the heck is going on here? It's not really connecting the way that I want it to connect. Okay, so let's get rid of this and measure that trend line one more time. It makes it a little bit of a shorter target, but it's better. We don't want to overshoot anything here either, right? So yeah, we'll take this trend line here and apply it to the top of the trend line. And guess what? Guess where that takes us, right? It takes us right to the $1.67 zone, which is completely confluent to the 169 of the 1.272 Fibonacci ratio. This is a complete set of confluent targets. It's massive. I hope you were able to follow through with this because this is massively insane. Aside from this, team, please know that I still have about, I think now I have around 13 or 14 seats left of the ARC Masters trading course, the 16-week mentorship that I'm going to do for the last time ever. I will not continue doing this, team. This will be the last 16-week mentorship that I will present, and I will continue my trading career as I cannot continue teaching because that is not really the career I wanted here, right? This is actually something that I'm providing so that I can help some retail members out. So I've let's see, 90. I have already had over 100 master students and mentees for this, right? So go ahead and request your information here for the ARC Masters Trading course. I'll pass you the syllabus, I'll pass you the disclaimer and all pertinent information. The course should be starting here for track 4 students now, since track 3 already started, and that is currently sitting at week number, we're going to week number 6 now. Okay, so please consider, come here, buddy. Put it over here. Put it over here. That's the little guy coming in here. Okay, yeah, so yeah, team, remember that this is week number 3 already has, so then we'll start up on January. But anyway, team, let's move on to the statistical side of the analysis. And this is actually going to be the 3-day back test, which actually fired off its signal on Friday or the end of session on Thursday, right? So that now tells us that from the point of $1.23, the signal has fired, right? So remember, this is a 3-day historical volatility versus stochastic momentum backtest that takes into consideration the following criteria. Anytime that volatility has contracted from the critical expansion zone, paired with stochastic momentum with an upside pivot, I have taken note of every iteration where that has happened throughout the 3-day time frame of NVOS throughout its entire trading history. These are the sample sets, and now this right here, so I can introduce to you if you're new to the channel, this is the data set. Okay, so now the data set here is telling us that out of 24 iterations, 18 have been guessed correctly to the upside, marking off an upside accuracy of 75% with an average upside thrust of 175.54% over the span of about 26.17 days. Whoa, I love it, baby. Go ahead. And sorry, guys. And the average duration comes out to, 26.17 days. The standard deviation based off of this, let me get this out of the way, buddy. Okay, go ahead. Now, the standard deviation based off of this here is actually 190.56% to the upside, and that is actually marking off a pretty massive move considering the present price action. I have every single price objective here, starting from the 175% upside thrust at $3.42, the 190% standard deviation coming up to, let's see, $3.59, and let's see, the upper bound of the first standard deviation would come out to 366% to the upside, and that marks off a target of $5.74, and it's getting a little crazier and crazier, right? Now let's get into those speculative numbers, right? But if it's marked off here in statistics, then there is a probability for it, since they are not. I mean, we have to remember that they're not certainties. They're definitely probabilities, right? The upper bound of the second standard deviation is leading up to a target of $8.10. And finally, the upper bound of the third standard deviation is leading to a massive 747.22% move to the upside. Otherwise, $10.44 based on the firing of this signal. So please remember that I'm not saying that it's going there. I'm just telling you that based on probabilities here, those are the potentials from the signal firing, which already fired on Thursday afternoon at the end of the session into Friday morning. Okay, team, so this is massively powerful. Please, please, please go ahead and remember that there is an absolute risk for price action here in any which way we can observe, right? So first of all, the weekly time frame closed a bearish engulfing candle formation. But what do I have to say about that? The prior 2 weeks also were in a formation here of a bearish engulfing, where the red candle engulfs the prior green one. And now we already did that again. But that bearish formation didn't really succeed. It actually just had price action completely ignored it, right? Hey, buddy. So from here, I can't tell you that it's gonna ignore here, but since we had one completely ignored iteration, then the chances are that the next one could be as well. Okay, so yeah, I kind of just want to point these things out. So if there is a slight downside from here, let's go ahead and just speculate on that, right? Because we have a clear we have a clear invalidation zone between the areas of about 104 to about I would say $1 flat, right? So if we come back to this formation here and see what's going down, if we were to come down here to the bottom side of the channel or the falling wedge here, well, that's marked off at about $1.06. Now, $1.06 is rhyming to you, right? Because we literally would just be right above this support of the 104 for the invalidation zone, right? So it's looking okay. And already in the immediate short-term time frame, 30 minutes, suggesting a continuation to the downside here. It is stepping into the gravitational zone of the bear weakness percentile, which means that we are likely to face a little bit of a downside here. Same situation on the buy hourly. And now, as you can see, the 8-hour, let's see the 6-hour. Yeah, the 6-hour was still introduced a little bit of a further downside here. 8-hour time frame is sitting in the gravitational zone of the bear strength percentile, which could have us bounce to the upside here. And same situation here with the 12-hour time frame sitting right in the opposing side's gravitational zone, the bear strength percentile for a bounce, right? So now I don't feel comfortable talking about the 2-day and the even the weekly or 5-day time frame RSI, right? It's the reason why is because there's so much going on in the immediate short-term time frame for us to consider here. Okay, team. So I think the video has gone on for absolutely too long. My apologies about that. Okay, so make sure to reserve your seat on the ARC Masters trading course, the 16-week mentorship, so that we can get you situated. Okay, team. So if any questions or concerns, you know where to reach me, but I appreciate you for watching this long movie. Okay, team. So yeah, I think that's pretty good there. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your night, and I will catch you at the bell mañana. Adios, team.